Alright everyone, Cowboy Trades here, welcome back to the channel for another update on KDA. So KDA once again looks like it's getting ready to start melting faces, and maybe not in the way that bulls are hoping. KDA BTC just broke down into new lows. We're going to talk about a few important price targets, rejections, key levels, and also wrap up the video on my price target. So let's dive right into this. Now let's start off very briefly talking about Bitcoin. On the 1 hour time frame, we are breaking down from this bull flag. The S&P 500 just got a key rejection from the trend line, so that's all I really want to mention. The greater markets outside KDA are not holding up too well right now, so KDA in of itself has a very important decision to make. Let's very quickly just clear up this chart and start off on the bull market support bands and the EMA ribbons. Now, like we previously mentioned, let's start off on the bull market support bands. In our previous video, we talked about how there could definitely be a new trade loading in for KDA. We were personally hoping to push up to the top side of the bull market support bands, but it looks like we got rejected at the lower bound of the bull market support bands. Now, like we highlighted in that video, we topped out around about $30 or so for KDA. We broke down, we lost the trend line, or we lost the bull market support bands. We came back up, back tested it, broke down lower. Next time we back tested it, we broke lower from a lower high. Over here you can see we retested it and absolutely fell through the floorboards. Every single time we have come up to the bull market support bands and actually touched them, we've pretty much instantly nuked to the downside. And if I zoom in, you can see we didn't quite touch them. I mean, by the time these start loading in the next few days, this might start to converge and we might have a touch point playing out. But nonetheless, it looks like we said in the video, KDA has pretty much topped out at this moment in time. And it's likely that we do start heading back down to the downside. So let's come back, make sure I don't lose my chart, and then get rid of the bull market support bands. Now, in terms of the EMA ribbons, we have a very important retest playing out right now. As you can see, in the past few days, the daily EMA ribbons have flipped bullish, and yesterday we had a nasty bearish engulfing candle, literally wiping out the past week's worth of gains or so. If we come over to the 4 hour time frame, you can see this looks like a short bar pattern which has pretty much come down and filled the price target in the immediate short term. 4 hour EMA ribbons are tightening, getting ready for a pretty big move right now. So it's very likely that KDA kind of hovers around the $1 to $1.04 region before the 4 hour flips bearish and we start cascading to the downside. But like I said, on the daily, we have a very important retest playing out right now. The EMA ribbons on the daily are extremely tight, and as we talk about on the channel, the majority of large moves in these markets happen when the EMA ribbons are at their tightest. For example, EMA ribbons at their tightest right here, huge move to the downside. EMA ribbons started to tighten on this retest, huge move to the downside. And of course, when EMA ribbons are their tightest is when they converge, because obviously if they've converged, they're touching each other and they're as tight as possible. As you can see, they crossed over here, huge move to the downside. You get the gist. Pretty much every time the EMA ribbons become tight, you do have a monumental move back up to the upside or the downside depending on the trend. But right now, we're sitting on the daily EMA ribbons that are residing round about $1. Let's call it $1 approximately, because we are above the EMA ribbons right now. So these are slowly grinding up. Keep your eyes on 99 cents to $1. If we do fall beneath 99 cents, you are going to be falling beneath the support of these daily EMA ribbons, and that is not going to be good for the price. Now, as we've previously discussed, we've only had 2 other times where KDA, since it topped out around about this $30 range, it's flipped bullish twice. Once over here, we temporarily flipped bullish, pushed up to $17, came back to back test, lost the EMA ribbons, broke back bearish. Now we have to come all the way over here. You can see EMA ribbons flipped bullish. And by the way, with both of these scenarios, you can see they only flipped bullish for a very short period of time. You came back to back test, had a baby bounce, M'd out and broke to the downside over here. You bounced up, came back to retest. You didn't even have a bounce. You just broke back down to the downside from $2.43. And right now we pushed up to $1.16. Everyone's acting like a new bull market is playing out, but we haven't even pushed up from the support of the EMA ribbons yet. So like I said, this important retest at this 99 cent to $1 region is extremely important for KDA. Let's pull back up our original chart and continue with the analysis. So, momento, por favor. get this back. So what's also quite interesting about this, as you can see, we've previously highlighted this head and shoulders pattern, price target all the way down here at 68 cents. If we do extrapolate this trend line, you can basically see, you know, yes, we pretty much perfectly came up to the bull market support bands, but we also found a tiny bit of support on this trend line, came back to back test it, and absolutely nuked through the floorboard. So it still seems like this head and shoulders trend line is still in play. It still seems like this price target down here at 68 to 69 cents is in play. This bear flag price target all the way down at 53 cents, a pretty nasty one, is still definitely in play in my opinion. Now, we move on from this chart. If we zoom in on the daily, we previously talked about this, how, you know, we talked about how we were setting up a W pattern, how I did not think we were going to break out, and I thought we were going to get rejected somewhere in this blue box where this encompasses, you know, previous candle body closes, this encompasses wicks, and also, you know, a double rejection, which is basically, I believe we started recording our video round about here when we had 2 or 3 rejections playing out on this trend line. And as you can see, you know, this W pattern doesn't particularly look valid to me anymore because, you know, we had a beautiful run down, beautiful run up, beautiful run down, beautiful run up, and we've come, you know, halfway down from this move. So it'd be a pretty ugly W pattern if we did continue the breakout at this moment in time. So I really don't think this is going to play out, just like I did mention in my previous KDA video yesterday. Oh, it was only yesterday that we covered this, or almost 48 hours ago, but nonetheless, as you can see, you know, since we've got rejected from this, since we've got rejected from the bull market support bands, EMA ribbons as well, we're sitting on that support. We've got a very, very crucial retest playing out at this moment in time. Now, if we come down from the lows, you can see KDA has temporarily bounced on the 618 Fibonacci, so down here at the 618, 96.5 cents. So really, you know, if you're gonna lose the EMA ribbons, you do not have much support down until about 96 cents, and as soon as you lose 96 cents, oscillators are going to start turning down very, very quickly, and you're going to see a very quick move back down. While we're on the subject of oscillators, if we start off on the daily, squeeze momentum indicator has started ticking into dark green, indicative that, you know, bulls are losing control. We're getting ready to start a new bearish trend. If we're looking at the MFI, the money flow index, visualizing the relative strength and also the liquidity in the market, you can see, you know, we recently came up to 91 and we haven't been this overextended since round about the 25th of October last year. So if we're looking at this, or 2021 rather, we weren't this overextended since KDA was round about $7.69, and you can see we also had a peak round about this $30 mark, round about, wow, 90. So as you can actually see, the all-time high for KDA is where the MFI topped out at 90 right here, and as you can see, we literally just came back up to 90. So we have been as overextended in terms of liquidity flowing in the market as we were at KDA's all-time high, which is a telltale sign that we should be expecting, you know, a move like this, a very, very sharp move back down, probably a 50% slash relatively quickly for KDA. Stochastic RSI, as we discussed the other day, has started to converge to the downside and flip bearish. Weekly time frame though, however, there's a lot of room to move down. It was only last week that momentum was starting to reside. The red squeeze momentum indicator was starting to tick into dark red, indicative that bears are losing control, and this lasted 1 week before we started to tick back into light red. Once again, indicative on the weekly time frame, bears are still extremely strong. I just noticed a new pattern as well, which I will quickly discuss after the oscillators. MFI as well has just approached the heart line. It's just exceeded the heart line at 54. As you can see, roundabout where we topped out was 98 over here. Then we've got a lower high at 66. Now we've got another lower high at 53, and I do believe we're going to start turning down. And as you actually can see, there's a very nice linear downtrend playing out on the MFI right now. So liquidity conditions are definitely weakening. Stochastic RSI has not even started to flip bearish, and the blue moving average has exceeded 91, which is higher than the peak in August, which was basically the top right here at $2.40. So once again, another signal that we should be expecting a nasty move back down to the downside. Now, like I said, I did also just notice a swing failure pattern that I do want to notice. A SFP, yeah, swing failure pattern. These swing failure patterns happen when, right here, you can see we've actually had a double swing failure pattern. So over here you can see there was a wick establishing the top of this range. We broke down. You can see, you know, this was very strong resistance, and we had a swing failure pattern, also known as a SFP right here, meaning, you know, you tried to swing out of the range and immediately were pushed back down to the downside. Now, we obviously, as we pushed up here, started forming a W pattern, and this trend line right here, $1.13, became the new top of the range. And once again, we've just had another SFP, another swing failure pattern at the top of the range as we're starting to break back down to the downside. So just noticed that, so I thought I'd just quickly comment on that. Now, we're wrapping up the oscillators. Like I said, you know, while kdausd has not quite broken down into new lows at this moment in time, we're still holding the lows at 79 cents, which of course, I'll talk about my price targets in just 1 second and why I think we're going lower. But KDA BTC, Bitcoin has been outperforming KDA recently. So KDA has just made new lows against Bitcoin, which is why I always tell people, if you're in a bear market and you're going to DCA something, which I don't recommend. I was here in 2017, I was here in 2018, I listened to retail. Retail said DCA every single dip, and it was a terrible idea. So yeah, just to let you know, DCAing altcoins in a bear market is a horrible idea. If you're going to hold anything during a bear market, hold Bitcoin, because all these altcoins underperform against Bitcoin. And, you know, once again, it's the opposite in a bull market. You want to hold a healthy bag of altcoins in a bull market because coins like KDA, Solana, if you didn't know, I'm a big fan of KDA. I'm not a hater. I don't think it's going to zero. I do want to buy this for very cheap, and I want to sell it for high. I don't want to buy every single dip and end up having no liquidity, having no capital at the end of the bear market to invest, and be needing to have a 20-25x just to break even. That is not how I navigate these markets. I'd much rather sit on the sidelines, wait for cheaper prices, buy cheap and sell high. That is how I navigate. But nonetheless, KDA has just broken into new lows against Bitcoin, and the last time we talked about this, we were predicting a 30% drop after we broke the range lows around about here on the one extension of this Fibonacci, and we talked about this price target down here at the 1.236, which was a 30% drop. Now, as of the time of recording, we've already moved down about 10%, so we've got about another 20 to 21% drop approximately before we do come down to these levels. So as I think KDA is breaking down, you know, I'm talking about, you know, obviously this swing failure pattern, I'm talking about this rejection from this W, rejection from the EMAs, or not rejection from the EMAs yet. We're still holding the daily. On the weekly short-term moving average is quite a bit further above our heads. Let's see if it's loaded in on this chart. Weekly time frame, yeah, the EMA ribbons on the weekly are quite a bit further above our heads, but you know, like I said, I think we're going to lose this support round about 99 cent. I think we're going to lose the fib round about 96 cent. Oscillators are telling me we're going to break down. So, you know, what are my immediate short-term price targets? Well, as we've been discussing over on this chart here, where we've laid out all of our price targets, the most macro price target that I've been mentioning for a while is down at 69 cent. This is the first huge area over on the volume profiles where there's a decent amount of data that's previously been traded and established around about this range. However, you know, 69 cent is unfortunately not my bear market price target. When I say unfortunately, if you like KDA, you should want to buy cheap. So you should be hoping for cheaper price targets if you want to buy this for the future. Like myself, I'd much prefer this goes to lower price targets, maybe, you know, 30 cent. I'd be very happy to buy then, and then we can see, you know, a huge run into the next cycle. People hope that, you know, it goes up and up and up and up and up and up forever, but that's not how these markets work. They are going to go up, down, up, down, up, down, boom and bust cycles. And if you're able to beautifully navigate and buy cheap and then wait for that next face rip to the upside, you will be the most profitable. You'll be far more profitable than the people who DCA'd at $5, the people who DCA'd at $1.40, the people who DCA'd at, you know, $1, the people who are DCAing now, you know, especially if you've been DCAing at $5, $10, even if the bottom's in, you're waiting for a 5x pump, a 10x pump to even break even. So not a good idea to DCA altcoins in a bear market, just my opinion from experience. Did that in 2017. It's a horrible idea. But nonetheless, like I said, 69 cent is not my bear market low price target. It's not, even the next volume profile down here at 50 cent is not my next bear market low price target. I think we're going lower than this, but 50 cent is a huge price target to keep your eyes on. So if we do head over to all of our price targets, the start of the volume profiles in the immediate short term start kicking in round about 69 cent. The bottom of the volume profiles where the next huge volume cluster is is at 50 cent. We talked about that bear flag price target at 53 cent as well. And also, I don't believe we've added this one in yet. The head and shoulders price target is down here at 68 cent. So basically at the top of these volume profiles. And the largest volume profile right down here starts kicking in at 31 cent. And the VPVR is right round here at 22 cent. Now bear in mind, this is not my price target for the immediate short term. If you watch the channel, you know that we like to take things one price target at a time. So let's see 69 cent come into fruition. We'll reevaluate the markets. I don't think that's the bottom. I'm very confident we're going to come down to at least 50 cent before we bottom. But nonetheless, I find this volume profile all the way down here at 30 cent very, very interesting. And once again, traditional markets are not looking good. The S&P 500 has just set up a nasty rejection from a lower level. And also Bitcoin is not looking good right now. On the 4-hour time frame, we just discussed this 1 hour bull flag that is breaking down unsuccessfully. We're extremely topped out in terms of liquidity conditions in the stock market in Bitcoin. There is still a lot of greed in the market. On the 4-hour for Bitcoin, this looks like it's setting up to be a BART pattern coming all the way down to 17,300. And as we've discussed, looking at KDA BTC, Bitcoin is currently heavily outperforming KDA. I mean, in the past day, KDA BTC pair dropped by about 8.5%. And, how do you think KDA is going to react if Bitcoin breaks all the way back down to 17,300? The KDA BTC pair is probably going to come down to this 1.236, and KDA USD is going to very quickly come down to our first volume profile at 69 cent. That's really all I've got for you for this video, my friends. As always, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and if you do want more of my posts, charts, economic data, all that good stuff, be sure to head over to my Twitter at 618_cowboy. Also, come and join the Discord. If you head over to my YouTube, click on About, you can see all of my official links are down below. Twitter, Instagram, Discord, and the merch store. All I've got for you today. It's been your boy Cowboy Trades. I'm out. Peace.